Morning all, how are we all doing? Morning Mumble, morning Steve, morning FTNet. Happy Friday, first of the month today as well. So new month, thank God. Glad that month's over, to be honest. It's just been sideways. So we're now coming into summer trading, which means more sideways. So yeah, 1st of August today. So we'll have a look at the news, see what's going on. Morning Peter, morning Virginia. And have a look at what happened yesterday. So the main move yesterday was the yen. I've got some movements today as well. Aussie New Zealand. I can't figure out what on earth is going on with this Aussie New Zealand. So annoying. I was about ready to get out of this yesterday. I didn't take it. And today it's 150 ADR away from my entry. So basically overnight we had some news on the New Zealand dollar, but I couldn't figure out what it was. We had, here we go, seeks urgent discussion with US trade representative. Trade Minister McClay discusses in an email statement, basically. So there's something going on in New Zealand. Exporters to the US may adjust margins, prices. There's nothing red here that I could see that would make any major difference. But this New Zealand dollar, Aussie New Zealand, absolutely flown this morning. But if you look at the other Aussie pairs, there's no movement on the Aussie US, no movement Aussie CAD, no movement Aussie Swiss, a little bit. Aussie yen, no movement. So you think, oh, it's the New Zealand dollar. New Zealand dollar CAD hasn't moved. New Zealand dollar Swiss hasn't moved. New Zealand yen down a little bit. New Zealand US, nothing. So for some reason, there's some disparity between the Australian dollar only and the New Zealand dollar. So this has to be something to do with trade between these two guys. There's a lot of money suddenly moved out of the New Zealand dollar into the Australian dollar for some reason. Can't figure out what it is, but it's the only thing that's gone parabolic. Obviously, there's my entry price. I've had exits available all week on it, and I was at the point where I thought today I'll just close some down for the weekend. Woke up this morning, it's gone. So yeah, don't know what's gone on with that. It's a very weird move. But yesterday's main news, we had the Bank of Japan rate, which came out as expected. Poor old yen yesterday, absolutely hammered. So all yen pairs yesterday were parabolic against the Japanese yen. We've just tapped straight into that monthly level this morning. I think we just had the 5-minute ORBs going, not quite. 23 seconds. So it looks pretty decent range-wise. 8, yeah. So we'll get trades on both of those today. So I'll come back to those in a minute. So yeah, so that was the main news yesterday. Nothing changed on the interest rate, but the monetary policy statement was fairly sort of gloomy. Morning Trading Hub, morning it's time. So that was what came out of the press conference. So slightly negative outlook for the Japanese yen moving forward. They still want more discussions with Trump about tariffs and stuff. So just came out basically bearish. Canadians yesterday, GDP exactly on forecast. The PCE came out exactly on forecast. Unemployment cost index, which very rarely does anything, was ever so slightly up. Unemployment claims pretty much bang on forecast. So other than that, yesterday, there wasn't really any news. The main movement yesterday was on these stock indices. They absolutely fell through the floor. So yeah, another big down day yesterday for the stock indices, which is now I think it's the 5th or the 6th day on the trot. Just collapsing. So really gloomy outlook with Trump and his lovely trade deals. I started this funded account yesterday with TopStep, and I did 1,400 odd. But yesterday I took a yen short, got out of it early. It went 200 ADR. I took about half of an ADR out of it. The NASDAQ yesterday, I got in here and I got out here. And that is what it did yesterday. So I started off my brand new funded Top Step account with $1,400 profit. It could have been something in the region of $6 yesterday if I'd have actually just held. If I'd have gone out and walked the dog or something, yesterday would have been a very different day. Anyway, so yeah, big drops in the indices yesterday. Absolutely no confidence in Trump's new tariff war. We thought it was over. Doesn't seem to be, does it? He's ramping it up again. So yeah, that was yesterday's news. Today we've got nothing really. This morning we've got CPI estimates for the Eurozone. Probably come out ever so slightly down, maybe based on what we've had from other CPI numbers, but I'm not really sure what we'll get out of that today, but it doesn't tend to move a lot. If you look at the European there, the Spanish CPI was up quite a bit, but doesn't really make a massive difference, these flash estimates. So the only real news we've got today is obviously non-farm payroll. So it's non-farm payroll day, unemployment rate at 130. Huge moves expected as usual. So this is the main thing they're interested in. If you look at Powell's statement from Wednesday, this is what he said you need to be watching. So today the market will be watching this because this is what he's hinging all of his potential interest rate decisions on at the moment. Everything else is going okay or is controllable. This is the thing that he is watching like a hawk to basically decide what to do with interest rates. So we are forecasting the unemployment rate to go up, which is negative for the dollar. If we get a 4.1, or if for any reason it came out at a 4, you're going to see that dollar fly because they will drop interest rates. If that number goes up, you will probably see a movement to the downside on the dollar, but I don't think it will be a catastrophic fall through the floor, because what it will mean is a freeze on interest rates, which is nothing unusual because that's what we've had. So the main impact you're going to find with this today is if we get a 4. If we get a 4.1, potentially you could see some strength in that dollar, but a 4 would give it a massive boost. You'll be seeing a 200 ADR day on it today. So that's the main thing today we've got to watch. Obviously, everyone calls it non-farm payroll. The movement we get on this event is nothing to do with the non-farm payroll. This is the thing that drives the market. So as you know, Powell clearly said, I don't know why the market decided to adopt it as non-farm payroll day. It's the unemployment rate. That's what drives the market. So anyway, that's coming out this afternoon at 1:30. Broken short on the DAX, inside bar on the FTSE at the moment. Obviously, markets are down again this morning, pre-market. So again, today, everything was going to move in line with the US stock market. So yeah, down day again, potentially. I'm just going to see if there's going to be an opportunity just to grab something out of these. So I get the feeling we're going to sell off this morning as well with the US markets. I think they're going to come down pre-market. So if you look at where we are, I hate this charting platform. Can't stand TradingView. If we look at the US markets and where we are right now, we've just today in Globex. So yesterday we came down. We undid this completely. We broke down through Thursday's low. This morning we tapped into the weekly low and we've broken it. So this is obviously the sell-off starting in Globex. So the markets are just starting to sell off ahead of the unemployment rate. So there's a good chance, I think, today we'll just get a grind, one of those grindy moves during Globex, where the market just, like here you got, market just grinds away, but it has a directional bias, yeah? So that's what I'm looking for today, is to try and take advantage of that in Globex. To see if I can grab sort of $300 or $400 or something from the morning. Downside target, obviously, you've got the weekly levels here. There's a previous weekly level there. So that is your resistance that we're going to hit today. So that's that weekly high there. That is the weekly low there. So this is the support resistance area that has been broken. So if we could get, I don't think we'll get that far in Globex, but we could do. So that's where I think we're going to get the bounce point today. But yeah, not looking particularly happy, are they, the markets at the minute, especially in the NASDAQ. Tech stocks, we had a lot of bad earnings on tech. So, the Dow is just falling out of bed completely. So be an interesting day today to see what happens. Right. So short break on the DAX and nothing on the FTSE. FTSE's inside bars at the moment. See where we go. I'm not sure I actually want to risk that much this morning. Don't really like taking high risk in Globex, but had a good day yesterday, so we'll go for it. Right. We'll see where those go. Not really going anywhere at the minute. So that's your news today. Obviously, non-farm payroll is going to dominate this afternoon. So that's your main focal point is the unemployment rate at 1:30. I'll be back on at 2:30, and obviously we'll trade through the PMIs. PMIs, obviously, compared to the unemployment rate, don't really do a lot. So, I mean, they do a lot, but when you get them following that, it's all about unemployment. So your ADRs today, the only thing that's hit ADR is Aussie New Zealand, and it is still going. So frustrating. I was absolutely anticipating a retest of this propulsion. At least I was anticipating a break down into the weekly low there, but this news today has just completely reversed this, which is very annoying. But anyway, nothing I can do about it. So you've got an ADR there. So we're coming up into the 1 week high from last week, which is the previous propulsion move to the downside of the news, which is where they added. That was the second add. So there's a good chance that we will hit resistance here. So not a bad looking ADR reversal today. You're in this massive propulsion gap. So it's worth dropping down onto low time frame and just looking for some signs of bearishness coming in. You did have, you haven't had a reversal alert yet today at ADR. There's probably one in here somewhere. I don't know, actually. I'm not sure you did get a reversal alert this morning. You definitely had one there. So there was definitely a reversal alert there. That was a reversal alert on that one. And you definitely had one there as well. So it has had reversals here this morning. So you'd be in from 125 ADR. But yeah, look for some signs of weakness on that. Euro Swiss also is extended today. It's just hit ADR. So a little bit of weakness in the Swiss franc. Again, bit of an odd move, this weakness we've had this morning in the Swiss franc. You don't tend to get this much movement in the Swissy pre-European Open. It tends to be in Europe, not in Asia. But so they've sold off the Swissy this morning. So again, Euro Swiss is an ADR hit to the upside, but obviously the market's just opening. So we don't know whether we're going to be bullish or bearish on the euro today. So we'll see where we go from there. But there is an ADR reversal. You've just had the reverse alert, so you are now in the retest. So that's a good target to aim for. But yeah, we'll see where we go. There we go. Starting that little sell-off this morning. So DAX broke to the downside. Absolutely no movement on the FTSE. Right, so those are your ADRs today. Nothing particularly exciting. Weekly ranges are lit up like a Christmas tree, obviously. We've had so much movement this week, which is great. But there's tons of those. There's no point in going through them when they're on a Friday. Anything that is extended on a weekly, it's just a case of just whizzing through and having a look at all the charts. And, it's obvious that is extended beyond its weekly range. It's already pulled back. So you're going to find most of these have already pulled back. So you will have missed those. RSI extensions today, there's quite a few as well that are above and below the 80 levels. So these are worth having a look at today. Euro US dollar, very extended down there on the Euro US. This move is absolutely huge. So this is 100, and I think this is did we get to 200% of the weekly range? Euro US. I think we are, aren't we? Yeah, so 200% of the weekly range on the Euro US, the Euro Yen, and the Euro CAD. So all of these huge extensions, 200% of what we normally do in a week. We're extended and embedded, and we've been all the way down there on that RSI. So it is starting to roll over now. You've got an inverse head and shoulders going in on the RSI. Yeah. So this entry here has the potential to pull back sort of 175 ADR before it's going to meet any kind of upside resistance. You've got this low here, bang in the middle of the propulsion move, which is 125 ADR. So today, Euro US dollar, you've had your 5-minute reversal alert. The risk reward on this, if you look at this low here, yeah, the risk reward on this up to 175 ADR is huge. So really, really good standard risk reward stop loss based trade, looking at it coming back up into there as sort of worst case scenario, 125 ADR, but you could get much more out of it. So good little long there. So if you're trading futures, you want to be looking at 6E for the euro. Long in that, basically. Not going anywhere yet, are we? So those RSIs, you've got your Euro US dollar, obviously massively extended, still embedded below the 30 level. So still some weakness in there. This is obviously now the monthly low. Your previous month's low is there. So you're within an ADR, basically. It is an ADR, down to the previous month's low. So if we can get down to there today for any reason, don't forget unemployment rate today. The US dollar could massively strengthen up or massively weaken. I don't think it's going to weaken as much as it would strengthen. So if we do get positive movement on that unemployment rate, if that comes down to 4, you're going to be down here somewhere. So just bear that in mind, obviously. But if it's all the way down here, the pullback on this is going to be huge when it comes. So again, good opportunity. Pound US dollar also extended to the downside. I've already got 4 on this in the last week. This is huge. Extension, again, extended and embedded all the way down here. This is bullish divergence, but it's just ever so slight incline. Yeah, just looking for a pullback on this at the moment. My target is a little conservative on it at the minute. So again, this is the same as the Euro US dollar. There's no point in trading both of these. They're pretty much exactly the same price action. There is your upside resistance, which is bang on where my average price entry is. Looking for a push back up below that double bottom support, which turned into resistance. So I'm looking for them to come and retest that area at some point. But again, we could see some very big weakness in this dollar today, depending on what happens with the unemployment figures. New Zealand US also extended. That's still coming down hard. So this New Zealand dollar is selling off now. Yeah, big sell-off on the New Zealand dollar this morning. Again, that's another one that's not good opportunity. I don't want to get overexposed, but there's an opportunity short there on the 6N. Short if you're trading futures. So yeah, New Zealand dollar, US dollar, very extended. And again, they're selling off very hard this morning. We've just broken out the monthly lows. So your next, right, so this is tricky. So that resistance there is your next stop. So we've got this area here, accumulation, resistance, support. That's your support today. So watch for a bounce down there. Should sell off down into that, which isn't far. You've literally got 20 pips. So half an ADR basically. Watch for a bounce out of that area down there. That's really nicely extended again. US dollar, all of them. US dollar CAD, massive extension to the upside. Dollar taking off, extended and embedded above the 80 level. Yeah, so this is going to be pulling back at least into there, potentially much further. So if we're going to continue that movement, obviously we're looking for the pullback to either be shallow, medium, or deep. Yeah, and off we go. So yeah, wait for some signs of shorts on that as well. Huge move on that this morning. What did I trade this morning? Yes, wasn't it? Take it. Another $400. Trouble with the top step accounts is to get paid, you have to have 5 days in a row at $200 profit. So when you get any new a new funded account, what you have to do is do 5 days at $200. So the focus for the first 5 days is not making tons of capital, it's getting paid, basically. Get your evaluation fees and everything back. So that's day 2 done. Right. We're broken short on the FTSE. DAX short is on the way. So US dollar CAD, nice extension to the upside on the 4 hour. US dollar Swiss also extended to the upside. Again, you've got this starting to roll over up here, but it's kind of in an accumulation. Very, very strong dollar at the minute. This propulsion gap is holding very nicely at the moment, though. So this is where we started that big sell-off. We pulled back. We're trying to break back through that level. So this is where we're expecting the sellers to continue the short move to add into their positions. And obviously, then you're going to hit some buyers here on the way back down. So again, all depends what happens with those numbers this afternoon for unemployment. US dollar yen, huge extension to the upside. Again, I wouldn't look at doing anything but selling the Japanese yen at the moment. However, saying that, we are coming up into resistance here. So again, pretty good area for taking short orders. Right, there we go. So basically, those are your RSI extensions. There's a few opportunities to get into things there. I've got the pound US on long at the moment. I'm not in that. Not in that. Euro CAD. I've still got some on this. So I took a big portion of my Euro CAD off here. I'm pretty much at break even with 3 positions on. So it's a very small position now. I'm expecting this to pull back. So if it does come back up into this area, I'm not sure it's going to get back that far. I think it's probably going to start to stall out here or here. So this area here, I would expect it to pull back into 38 retracement and continue to the downside. So if that dollar strengthens up for any reason this afternoon, the CAD will as well. Oil prices are rising as well, which should also make the Canadian dollar strong. So I'm not worried about taking another entry on this, but my next entry is miles away. It's all the way up there. So I'm not really that bothered. Aussie US, that's a nice looking opportunity for longs, but it doesn't really fit because I've already got the pound US dollar long on. Aussie New Zealand, as I say, should have got out of it. I've had opportunities to get out of it for the last 2 weeks, but it's a break even. There's no point in taking a break even. Should have done in hindsight, but obviously I didn't know hindsight was going to say that. So I mean it. This is where I was anticipating coming down to. So I was looking at, I was watching these lower lows going in basically. So we had that high, that's a broker candle, but low, lower high, double bottom, lower high, triple bottom, wedge, break, pop. So yeah, another great example of why fundamentals are much more important than technical analysis. I don't care how many symmetrical triangles or how many wedges to the downside and upside you show me. If the market fundamentals change based on economics, the market will go whichever way it needs to go. It's got nothing to do with technical analysis. People spend their entire lives dedicated to learning technical analysis to take trades, not realizing that this is the stuff that makes it go up and down. But anyway, we do what we do. Stopped out on the FTSE. Can't get anywhere with that this morning. DAX is struggling a little bit as well. Right, let's catch up on the chat. We have been zapped with 15% tariffs in New Zealand. They were 10%. Is that what it is it? So why is that not showing up in bright red everywhere here? They've let us down, Financial Juice, because it's not in the newsfeed. There we go. At midnight. It is in the newsfeed. US to impose 15% tariffs on goods from New Zealand. Okay, there we go. So I missed that. So I just completely missed that. I've missed all this. I scrolled back on Financial Juice this morning, looking basically for some news. And I went all the way back here, and I was like, as soon as you get to China, which tends to be the first main news that we get, I stopped. I looked at last night's news before I went to bed. So this news that's all come out overnight. Why is Trump announcing stuff at midnight? Basically the last news I saw was sort of around about 9-10 o'clock last night. We just made a couple of other trade deals a little while ago. So I saw that come through and I was like, oh, okay, fine. And then I went to bed. I missed all of this somehow this morning. So we got 10% tariffs on trading partners. We know that. Executive order increasing tariffs on Canada from 25 to 35. So that's negative CAD. Going to effect on the 1st of August. This is why it's 1 minute past. This is what it is, isn't it? It's the August tariffs that he said he was going to do. Trump administration will continue to use available tools to protect national security. Trump has determined necessary to and appropriate to modify the reciprocal tariffs for certain countries. Minimum 10% stays in place. Goods transshipped to evade 35% tariff on Canada will be subject instead to a transshipment of 40% tariff. Trump to impose 39% tariff on Swiss goods. Okay, so there we go. So chocolate basically is going up by 35% in America, 39% even. That'll please the Americans, won't it? So chocolate's going up by 39%. So that explains the Swiss franc moves this morning. What I was just talking about. So I was like, why is the Swissy moving in Asia? There we go. That's why. So again, this is what drives the market, not lines or indicators. Swiss goods, 40% from Laos, Sri Lanka, Myanmar, Malaysia. None of that is impactive. 15% tariffs on goods from Israel. What does Israel export to America? Turkey, South Korea, blah, blah, blah. So basically, New Zealand has just been hit by this additional up from 10 to 15, isn't it? That's all that is. This is what I mean. That move on the Aussie-New Zealand seems disproportionately large compared to all the other New Zealand pairs and all the other Aussie pairs. So it's almost as if what has happened is a load of money has been moved out of New Zealand into Australia, which is why Aussie-New Zealand's done that. And all the other Aussie and New Zealand pairs are stable because it's transfer of currency from New Zealand to Australia. So it's a bit of a weird move. Even on that, it's like, why stick it in Australia? I assume Australia is not getting the 15% tariffs. It doesn't mention it, does he? But maybe that's what it is. So 15% on New Zealand. So that's lamb. If the US has surplus with a country, the tariff rate will be 10%. Small deficit nations will have 15. Japanese ratios. No final decision on China. Okay, there we go. So completely missed all of that because it all came out at a time I was not expecting news from Trump. But anyway, right. So there we go. So obviously that's caused these main movements that we've got this morning. Market is holding stable at the minute on the US dollar. So I think the majority of the movement you're going to see today is probably going to be Australasian and New Zealand. So maybe a continuation on that Aussie New Zealand. So maybe looking for short opportunities on New Zealand dollar this morning. Small risk trade, just see if we get a continuation move on the New Zealand dollar. Might get a couple of $100 extra cash out of it. Right, so replaced 6-bar range. That's the 30-minute ORB on the FTSE. So see if we can get a break on the 30. The first half an hour this morning is just absolutely nonsense on the FTSE. We are clean breakout the DAX. So looking at targets to the downside today for DAX. We need to go out much further on the DAX to find an area. We got a big gap down scenario as well. Isn't good. Blimey. Okay, so we're looking at that low there. Is your previous monthly, which is 23,619. That's your closest. There we go. So it's this monthly level here. That is the monthly we just looked at. So my partial close is there. So obviously, if we do come down and test that area, I'll be out partial close before we get the bounce. Looking at FTSE today. We've got this weekly level here, which is your 2-week high. Again, partial close. We've got this area there to watch, which is the weekly low so far. That's Monday's low. We might get a bounce out of Monday's low. If not, we'll come down and test that weekly. We've got this area here as well. So this whole area here basically is support. But we haven't broken short. So if we break long today on the FTSE, I'll be getting out. I mean, this is Globex. Well, no, it's not a Globex. This doesn't exist. The market is not open there. This is just pure broker, speculative broker candles. So upside, really, this sell-off that we had yesterday at end of market, that's where we're going to find some resistance potentially. So that partial looks good to the upside, but we haven't broken yet. So we'll wait and see what happens with that one. Terrible day yesterday, as you can see. Given back yesterday, gave back pretty much all the profit from Wednesday. Market yesterday was absolutely awful. So it was one of those days which you just can't do anything with. So the market opened in an absolute whipsaw. We went into rotation for the first kind of hour or so. Then we broke down. And then we pulled straight back up inside the range again. Then we sold off. So couldn't do anything with yesterday. It was just whipsaw, whipsaw, whipsaw. So all three were exactly the same yesterday, as you can see. Just got triggered short, stopped out, triggered long, stopped out. Then the actual break couldn't get on it because it was too late. It happened well after an hour into the market yesterday. Same with the NASDAQ. So NASDAQ, there wasn't any trades on the NASDAQ yesterday, actually, because the opening range on the NASDAQ yesterday was too big. There we go. So the 630. So that range there was well over the 40% ADR. So we opened up on the NASDAQ yesterday. That's a pre-market move. Opened up with 40% of the average daily range. And then obviously it collapsed. Good couple of hundred ADR yesterday, wasn't it? It was a huge move on the NASDAQ. We did 557 yesterday. ADR is 242. So stupendous day. I just didn't catch it. So the ORB, if you did take it yesterday, your ORB would have been there. So you would have triggered short, stopped out, and then it was more than 30 minutes before the second break. So again, standard ORB settings just did not work yesterday. It was an abnormal market. So can't do much with it. But yeah, bad day yesterday. So hopefully we'll recoup that today, or some of it, but still up masses on the month. So hey ho, even. UK and Australia still 10%. So yeah, so Australia being at 10%, obviously that would make complete sense as to the Aussie New Zealand move. So this is basically this is movement of money. Yeah. So the world works on business, economy, economics. So if you're a New Zealand business and you're just about to have 5% wiped off your bottom line, and you've got distribution from available from Australia as well, what they're going to do is just basically export all of their goods from Australia. So all the capital is moving into the Australian sector of the New Zealand business. It's pretty standard business practice. This is what Trump was talking about with this transshipping, basically. So what companies do when you get this this type of situation, you transship to avoid the tariffs. So if you're in Canada and it's going to cost you 35% to import it into the US, but you have a business hub in the UK, which is going to cost 10%, what you do is you ship your goods to the UK hub and then ship it to the US from the UK. So as long as the cost of shipping from Canada to the UK is not going to outweigh the 20% differential between the tariffs, all you do is you just ship your goods from the UK and you pay a 10% tariff. You don't pay 35%. Simple business. Yeah. So businesses have hubs all over the world because there is a cost of doing business differential and also tax. Yeah. So there's very big tax differences around the world as to what you pay. So you basically set your business up to be tax efficient. Now you're going to set your business up to be tariff efficient. So that's all that is doing. What he's doing is saying if you're transshipping things, you're going to get an extra 5% on you if we catch you. But there's nothing wrong with doing this. This is totally legal. So Trump will find it very hard to stick this 40% tax on if you ship it from there, because he's agreed to do it for 10%. Make your mind up, mate. Just because it's a Canadian company operating out of the US, out of the UK, the goods are still coming from the UK. So this is where it all gets very, very messy, isn't it? And it's just very difficult to sort of police, if you like, from Trump's perspective. But not our problem, is it? Right, there we go. Anybody got anything else they want to look at or discuss this morning? It's meant to be Q&A. I sort of tee this one up as a Q&A session. But no one seems to really Q&A in this session. Afternoon, Pallades. Top step is 150, not 200. Well, it depends what you look at. It's still 200 on the documentation. They have said it's 100 now, 150 now, but the documentation, if you look on Top Step, still says 200. It depends which platform you're on. I'm on the platform. I don't know. I don't know whether I'm on the legacy platform, as they call it, or if I'm on the new platform. But it doesn't matter, does it? Whether it's 150 or 200 a day, basically. You need 5 profitable days. On a 100K account, the difference between 150 and 200 is literally 3 ticks. So I'm never going to take 3 ticks on anything. So it's irrelevant whether it's, if it's 500, it's kind of irrelevant, isn't it? It's a little bit less relevant, if you like. But I don't know. Anyway, so breaks short on FTSE. So we are off. So let's hope we can get some of this loss from yesterday back today. Not far away from target on the DAX. Pound CAD, a little more space to the downside than reversal. Yes, the other thing I was going to cover this morning. I will cover that in a minute. Pound CAD basically. What are we doing on the pound CAD? a difficult one, the pound CAD, because it's just a bit of a choppy mess, isn't it, at the minute? News, choppy mess, news, choppy mess, news. Don't know. It's very difficult to call, but you've got this area here that we're holding up at the moment. So you got this low and this low, which is this high there, basically. So this kind of area, you can see we bought it from here, we bought it from here, we bought it from here, bought it, bought it, bought it, bought it, buying it, buying it. So this is kind of an area of sort of main support at the moment. But obviously, we've got a slight advantage for the Canadians at the moment in the respect of oil prices are rallying, or were rallying. They seem to be pulling back a little bit at the moment. The pound has got no strength whatsoever. So I think the best thing you can hope for at the moment with this is some kind of weakness in the Canadian dollar. Obviously, these tariffs are still bad for CAD. So this is why we're getting a lot of this type of movement. There's no real advantage for the Canadian or the pound at the moment. So when you've got a bear against a bear, which you've kind of got at the moment, you get a sideways move, which is what you got. So you're going to get news events, which are going to tip that balance short term. But really, there's no advantage either way on this at the minute. You got a propulsion move there, which is that breakout. But it's really old. You know, it's 3 months old now. It's going back to April. But there's way more upside targets on this. But I think you've got a potential for a move down 125 ADR. If it breaks down below that level, you're going to get the breakout traders trying to short it. So it's difficult. It's a really difficult one at the moment. There's no real advantage. Earlier this week, it was a buy, but it didn't hold. So it's a tricky one. That was a decent long signal there, which you've got one, probably 3/4 of an ADR out of. You probably would have been in round about there. An ADR. So yeah, that was an exit. So you've been in and out on that. It's not going anywhere, is it? This is trouble. It's just grinding. It's a grindy mess. It's the best way to describe it. You have just mentioned that fundamental news drives price. Can you recommend what we can do at home to learn incorporating these things into position trading strategies? Learn economics. That's all I can really say. Not able to follow the stream due to work. Has the website you helped develop gone live? It's not gone live. It's open for testing. Watch Wednesday's members stream if you want to go and play with it. I covered it on Wednesday in the members stream. It's that one. So yeah, go and watch that. There's links in the members channel in Discord as well. It is live for members to test. It's in development. That's all about fundamentals, that website. So I covered it in detail in that stream, a couple of hours. So yeah, go and have a look at that. But as for learning fundamentals, there's many places you can learn fundamentals, but at the end of the day, and you know, this website that's being developed is very, very useful. There's one section I concentrate on quite a lot on there, which I think is the best part of that website. And it talks, and it basically it shows you the economic calendar for individual currencies. So, and it tells you basically visually, green or red, whether or not the last X number of news events are positive or not. If you've had good news for the last 6 news events for the dollar, you should not be selling the dollar, basically. But it doesn't mean that the next news event isn't going to be bearish. So all you can do with fundamentals is use them as a kind of a top-down view of price, basically. So it's like a moving average. Yeah. So this is why people use moving averages. But the trouble with every indicator, and don't forget, all these are indicators. Yeah. These are called leading indicators. Yeah. This here and this here are the switches for driving price. If interest rates go up or down unexpectedly, that will drive price for weeks in one direction. So what the market is trying to do is guess when they are going to press those switches. That is basically what economics is. I am trying to guess when they're dropping that to 4.25. I'm going to guess whether it's going to be July, August, or September. It wasn't July. Is it going to be August or September? If it's going to be August, I need to sell the dollar now. If it's going to be September, I need to think about selling the dollar at some point this month and holding it for a few months. This is what all banks and institutions are trying to do. Guess this. And this is why this is the most important thing on the planet if you're a trader. Because this press conference here, when Powell stands up and says, this is what we are looking at the moment, and that one, he said, we are looking at interest rates. That is what you need to pay, unemployment rate. That is what you need to pay attention to. What's coming out this afternoon at 1:30? If that comes out way lower than forecast, this is going down in August. Yeah. So you see that come out at 4 today. If you press the sell button now, go on holiday for 3 months, you'll come back to a big pot of cash. That's what banks and institutions do. So, but learning it is about learning economics, learning what drives price, what is interlinked to each of these things. So you've got interest rates, you've got inflation, you've got unemployment, the unemployment rate, and you've got GDP. Those are your 4 leading indicators, as they're called. And these all feed into each other. So the unemployment rate will feed into interest rates. Inflation feeds into interest rates. GDP feeds into interest rates. So when that goes up, that will go up. When that goes up, that will go down. That one's a bit of a hit and miss, depending on what the other 3 are doing. But it's basically a massive engine with 100 cogs in it. So for the dollar, for example, there's 37 news events a month. For the Swiss franc, there's 3. Yeah. So again, it's not level playing field. Yeah. If you can't compare the Swiss franc to the dollar equally, because this one's got 37 things that drive it and this one's got 3. So how do you weight that against that? And this is what the banks and this is why the banks and institutions employ people and pay them 6-figure salaries to analyze this stuff. It's bloody complicated. But at the end of the day, if there's a load of green numbers, buy it. If there's a load of red numbers, sell it. And if you've got a load of green numbers in a row, don't buy it. Or don't sell it, rather. Yeah. And it's just, that's all, as simple as it is. It's a traffic light system. But, you know, this is why I say, actually, Tom Hugard put a post in on his channel. He's on holiday at the moment. And he said something in there again about, I can't remember exactly what it was. The great deceit of technical analysis is that traders, new and experienced, believe that that all there is to making untold profits is to study technical analysis. Yeah, it's an absolute myth. You know, this is we can sell courses on head and shoulders patterns, Elliott wave, breaks of structure, and all your ICT crap. You can sell courses on anything. Yeah. But at the end of the day, none of that stuff makes any difference whatsoever, because if the interest rate changes, it all just gets thrown out the window. So this on its own is not a trading system. It is a directional bias. There is absolutely no timing signals in fundamentals. Yeah. You cannot use it for timing. You can use it to enter at specific times, but when the market moves is not controlled by the fundamental. The fundamental just gives a directional bias. So it's really difficult. I've thought about putting together courses on it, but I think at the end of the day, when you come out of a course on this, you're just going to come out with no real edge. Because let's say, for example, the unemployment rate today comes out as a negative. Yeah. So if you look at the pound US dollar, if that unemployment rate comes out at 4 today, this is going down. Yeah. Well, no, actually, it's not necessarily going down. This is the thing. It's dependent on when the market thinks those unemployment rate numbers are going to affect the dollar. This is the thing. So if the unemployment rate goes down, you're going to find that basically. Yeah. So if that goes down to 4, what you will see today is a spike. But when the market has absorbed that information and done all the maths with all the other the other 37 drivers that are going on, they might think actually, well, at the moment, that isn't really what we're going to do. But next week, they will then get ready to start piling into or out of the dollar, depending on what the interest rate's going to do in August. And they'll do that. So all it does is it gives you a directional bias for market structure. But it won't help you time when you should press the button. That is still technical. So that is where your technical analysis comes in, is Fibonacci, for example, or RSI extensions with your fundamental directional bias. But that will change at the drop of a hat. So if you suddenly get your unemployment rate coming down today, and then the next 6 news events are all opposite, it will just come back down again, because that one thing on its own is not enough to drive interest rate decisions. There's 37 of them. This is where it gets incredibly complex, which is why banks and institutions have scorecarding systems. So, I don't think there is a way to really use fundamentals as your only source. You have to use it as part of what's going on. Just be aware of it. DAX is stalling. Maybe it was. Probably that was a while ago you said that. I've got 1,800 I can bank right now. Got 1 minute left. I'm just going to take a partial on the DAX. I'm going to leave the FTSE to run. And then obviously I'll take the second part of that DAX, but I've tightened up my trailer on that, I forgot. So yeah, partial going in on the DAX in the next 30 seconds, just to get some profit in the bank today. Catch up on the chat again. Twig trades. It's been a very funny year for trading fundamentals with interest rate differentials taking a back seat to tariff chat. Yeah, and this is the other thing you have to be aware of. This is why trading is so bloody difficult. There is no way. There goes partial taken on the DAX. There is no way to determine what is going to drive a market anytime. Yeah, so when Trump came in, and anybody that was here in the live rooms when Trump won the election, I said, you can forget everything moving forward because the market's now going to move on Trump. That's it. It moves on Twitter now. So fundamentals are out the window because Trump will move the market when Trump wants to move the market in the way he wants to move the market, using whatever he uses to move the market. That's basically what happens from now. When Trump is not in administration, fundamentals will move the market more, unless we're not having some kind of war, in which case that will move the market. But if we're not having a war, we might have some kind of pandemic, which will move the market, or banking crisis, or something else. It doesn't matter what you use as a gauge to determine which way price is going to go and when it's going to go somewhere. There are a billion things on this planet that drive fear and greed. And this is what the market moves on, fear and greed. It is literally a tool for bank and institutional traders to manufacture huge wealth. Yeah. So all you can do at any time is wrap risk around price. I am taking a short trade here. I am risking 100. My goal is to make more than 100. Whether this goes up or down today has got nothing to do with me, nothing to do with any individual bank, institution, or news event. It will move when it moves, where it moves to. I don't know what the catalyst will be, if there will even be a catalyst. It's got nothing to do with me. It's all about risk reward, and it's all about extracting money from market movement. So the job you have is understanding market movement. What's likely to happen next on the US dollar CAD? It's going to pull back. Why? Because it's pushed up. Why is it going to pull back? Because that's what it's always done. Why is it going to pull back? I don't care. I don't know. What I do know is it is. When is it going to do it? No idea. You can't time it because you're not in control of the timing. Neither is the market, because when this thing every day goes up and down, there's 10 major institutions around the world that have enough capital to pump to make this move. Which way are they going today? Don't know. Some of them will be going up. Some of them will be going down. What's the volume of down versus up? Don't know. If the volume of up versus down is more, up against down is more, it'll go up. If the volume of down is more, it'll go down. That's all you know. When are those orders being executed? You think a line on your chart or an indicator and squiggly line is going to make the blindest bit of difference as to whether or not you make money today? No, it's got nothing to do with it. You have to have an understanding of how it all works, and fundamentals is part of that. But at the end of the day, there's nothing really that is going to help you make a decision that is going to guarantee you a strike rate or a strategy that will work regularly. Look at this. I mean, look at the P&L on it. Yeah, 6%, 1.6, 6.75, 0.7, lost 5, lost 2, made 3, made 13, lost 3, lost 10. Yeah, all of that gone in 2 days. But the edge is long term there, which we know, but the days are totally out of my control. What happens on a day-to-day basis has got nothing to do with this strategy or anything. All this strategy does is wraps a risk formula around price movement that we can see repeating itself sometimes. That's trading. That's all you have. You have to identify price patterns, and you have to just put a plan together that has a statistical, mathematical edge to extract more wealth than it puts into it. That's it. So understanding fundamentals is important. Understanding news is important. Do you really want to be taking a trade at 1:30 this afternoon? No. So if you are sitting there as a new trader, and you will have done this yourself, you'll place a trade in the market long because you like this YouTuber that said that when you get that happen and then it's followed by that, and you get one of those, and then there's a big bull candle like that, you take a long trade. You'll have done that at 125, and all of a sudden it'll go down there, your stop loss won't get honored, and you'll lose 3 times more money than you thought you were going to. That's because you are yet to discover what drives the market. Now, when that's happened to you 3 times, you'll suddenly go, why did that happen? And we get it, don't we, in Discord all the time. What's just happened to the US dollar? That happened to the US dollar. News. This is what moves it, yeah? And if you don't know about it, you're going to die. That's it. Simple as that. So, but that doesn't help you. And a lot of people jive in here. They go, right, I'm going to trade at 130 because the market's going to move. There goes 7% of your account. But last time it went like that, and it would have made me 60%. But it's, you know, it's totally random. Everything that happens in the market is random because there is a differential between buyers and sellers at any one particular point in time, which is random. So therefore, you cannot predict price movement. Price will have patterns based on the way institutions place orders in the market. Yeah. So they cannot dump all of their order in one go. They dump it in parts, wait, parts, wait, part, wait, part, wait. When is that order going to be completed? I don't know. So all the trend traders go, hey, look, we got a trend breakout. I'm going to buy the next pullback in it. Brilliant. We make a bit of money, but that happens 30% of the time. 70% of the time they lose, and they don't understand why they lose money. You know, it's just because the strategy is not going to generate long-term alpha. And this is where your back testing comes in. I've never back tested a trend strategy that's really made any money. It just doesn't work because you never know when the trades are coming. What if you get a year that goes sideways? What'd you do? How'd you pay your mortgage? You can't. Doesn't work, does it? Morning, Plowman. But if fundamentals drive price and we should follow it, then why would we not want to trade in the direction of the trend or the fundamental direction? When do we then go counter and wait until RSI? You can do. Wait till RSI is extended. Yeah, do that. It's a 50-50 chance, isn't it? So basically what you're saying is, if all the fundamentals are pointing up on the US dollar, I'm only going to trade long trades, yeah? So that's absolutely fine. Do that. But what happens today when the unemployment rate, so let's say we're long on the dollar. We're saying we're only going to go long on the dollar. What happens today when that unemployment rate comes out at 4? Yeah. The dollar is going to collapse. So what do you do on Monday? Yeah. So we've had loads of news and loads of positive movement on the dollar. Today, we had one news event that said the dollar's going the other way. What do you do on Monday? Are you bullish or are you bearish on the dollar because of the unemployment number today? I don't know. I'm not asking specifically you or me or anybody. What is the odds of on Monday the US dollar going up or down? So wrap price risk around price and trade it. If you have a directional bias on the dollar and the day you enter a trade, a news event drives it the other way, is it a pullback created by the news, or is it a redirection in bias and long-term movement? How do you determine that? Every bank and institution has a scorecarding system which gives a plus or a minus to a news event based on the figures. Each of the banks and institutions' scorecarding systems are slightly different. Therefore, when that news event drives the dollar like this, one of them will give that a plus 10, the other one will give it a minus 2. But the overall scorecard numbers for each of them are going to be different. So which way is the market going to go? It's going to go the way where the most money is. If more people buy it one day, it will go up. If more people sell it one day, it will go down. And this is why it's useful to know, it's important to understand, but it's useless from a trading tool perspective because it changes every time. The dollar's got good news, the dollar's got good news, the dollar's got good news. Brilliant, I'm just going to buy the dollar. The day you buy it, it has bad news. It doesn't help you, does it? It doesn't help you. But you need to understand what drives it. It's not lines. This is what I'm saying. All I'm saying is, do not spend the next year of your life following and learning Elliott wave. Because Elliott wave is this. What is that? Price movement caused by banks. Yeah? Doesn't help you in any way, shape or form, apart from give you a reason to press a button. Whether it works or not is still a random 50-50 probability. As long as you are learning Elliott wave and the main thing you're paying attention to is risk-reward ratios, that's fine. You can get into the market any way you like. When the market pushes up and it pulls back and then it pushes up higher and it pulls back and it pushes up and you see it going like that, take a short because that's an ABC pattern in formation. But if it does that, make sure your risk is smaller than the target because the ones that work need to pay you more money. That's all you have, statistical, mathematical edge. Fundamentals doesn't help you with that part of the job. And that part of the job is what makes the reason this ORB strategy works is because I go in short, I have a risk there. And as you can see, my target is there. What is my target? Twice my risk. This is why the strategy works. It's got nothing to do with me guessing this or a news event driving this or Trump saying something and making it move. It's got to do with the fact that I risk that amount of money and I make that amount of money. That's why I make money, not because I have any clear understanding of how markets move or anything else. It's just standard mathematics, statistics. It's all it's about. But this is what drives it. So you have to be aware of it. But you can't make it your be-all and end-all. There's people out there like Anton Creel. If you want to really know about fundamentals and know the in-depth mechanics of economics, do Anton Kreil's course. Anton Kreil is an ex-banker, I think it's Morgan Stanley. Morgan Stanley, I don't know. He's an ex-banker, basically. And he knows everything there is to know about economics and fundamentals. So if you want to learn it, learn it. But you will come back with a brain completely full of new information, which will still give you a 50-50 probability of pressing a button. You may now only press the button in one direction, which is fine. So you will have a bias. But the bias on something is not like that. The bias is that. So I can make money on these going against that with no problem. Goldman Sachs was the Anton, yeah. One of them, one of the biggies. There we go, caught up on chat. So I just wanted to quickly cover this. Aussie New Zealand 175. I'm going to have to... Actually, I've got positions on it, haven't I? Oh, so annoying. So I'm developing this indicator at the moment, which basically plots all the news events historically on your chart going back. So this is plotting the unemployment rate, basically, going back. And it also, this isn't working yet, but it's going to give you statistical analysis on hourly, 4-hourly, daily, and potentially, I was going to do 3-day movement as well. So talking about fundamentals, I'm just basically putting this together to get statistical analysis on deviations. So, for example, this is the unemployment rate for the US dollar. Previous was 4.2, actual was 4.3. Forecast was 4.3, actual was 4.1. So what happened to this instrument, in this case, the US dollar CAD, on that news event when that came out as a 4.1? So it's kind of an at-a-glance financial fundamental analysis tool in the fact that you can see all the previous news and obviously see what happened to it. Yeah. So this is the US dollar CAD. On that last one, the actual came out lower than the forecast. Yeah. It pushed up. Normally you would see it push down. Yeah. So it allows you to analyze basically all the fundamentals in the past. So you can just basically see them all on your chart and see what happened on those news events. So you can see that sometimes obviously we get a massive movement. Sometimes we don't. But I'm putting this together at the moment because I've got this database now of all the fundamental news events in the past going back 10 years. And I'm just trying to find a way to build something useful with it, really, at the end of the day. So this is basically running off of a spreadsheet. So if we switch over to something like the euro pound, we won't see any of those because, whoops, there is no unemployment rate for the euro or the pound. So if we remove that, that will give us all news events for the euro and the pound. In fact, I don't really want all the orange ones. Let's get rid of the medium impacts. So that's all the high impact news events for the euro and the pound. So we can see there's the GDP figure. What's that? GDP, that's Bailey speaking. So it gives us an idea. So there's a high congregation of news events there, look. And what happened after those news events? We took off for 2 days. Yeah, but then we pulled all the way back again. And then actually we went lower. So, but there was no news that caused that. So it's really useful as a tool for just looking at what's happened in the past. So the idea behind it is when we've got like CPI coming up for the pound, for example, why is that not doing that? I've got exact, I want false for exact match. So when we've got the CPI coming up for the pound, we can look at all the previous CPI results for the pound going back and see what happened. So that one was an actual of 3.6 on a forecast of 3.4. So the inflation went up, which is obviously usually negative for the pound. So you can see the pound came down for 24 hours afterwards. There we've got a forecast of 3.3 and we got a 3.4. Didn't really do a lot, did come down a little bit. That's euro. Pound CPI previous forecast is 3.3. The actual is 3.5. Big drop. Yeah. But normally you would expect fundamentally to see a big pop. When inflation goes up, it means that we're going to raise interest rates. However, what it means when you're in an interest rate decline, which we are at the moment, is the interest rates will be frozen, which is negative for the currency. Yeah. So all these little intricacies, sometimes bigger than actual is better. Other times bigger than actual is worse. But it all depends on what the current monetary policy stance of the banking institution is. So it doesn't help you. Do you see what I mean? The fundamentals don't help you unless you understand all the other mechanics that lie underneath it. It's incredibly complex. At the moment, we're in an interest rate decline, which means that all countries around the world are reducing interest rates because inflation has been dropping. You get to a point where it crosses over and all of a sudden we go into an interest rate rise scenario. Then these news impacts will have a completely different directional bias. Yeah. You've got to understand all of this, which is why I say don't bother. Just understand that it moves the market. That's the key. So I'm in the middle of developing this basically as a research tool, which is going to give me sort of a clear understanding of how impact works within each news event. So, you can see there, we rallied for 2 hours. And the reason I think this is going to be useful is not for long-term analysis. It's going to be more for what happens immediately after that news event. So when that news event comes out, if the differential is 2.8 on a forecast of 3, you can see we had 3 hours of rally there. So the way to use it is understanding what the result you get is compared to the forecast, and then looking historically at what normally happens. And that gives you a very short-term intraday bias. So it's a scalping tool, really, if you like, which is why I want it to sort of put that sort of information that we saw there on the screen. So it's a development version. Yeah, so we'll be able to get an instant overview of basically what we're expecting price to do if we get a certain number. Yeah, so I think it's going to be quite a good little scalping tool. So the reason I'm developing this is for me to try and find a way to develop a breakout strategy based around sort of 15 minutes after a news event. So obviously we get that massive whipsaw and spike and the volatility come through on news, then the market tends to calm down. So what I want to understand from this tool is after that calm down, we are going to do something. Should we be going up by 0.3%, 0.4% within 1 hour and 4 hours or not? If we are, we know we can take a breakout buy or a breakout short. So the idea is to try and develop a manual trading strategy based around pauses after news. So obviously this is just going to highlight every single one of those news events. So in order to develop it, you need to know when they were and what happened. Yeah, so there's your whipsaw look. That's what you always get on news. There's your massive whipsaw. Yeah. But after that news event, what happened? So there's your 5, 10. Oh, sorry, this is an hour after, isn't it? Go down to 5 minutes. I'll find one now. Blimey. Needle in a haystack on a 5-minute chart trying to find anything. There we go. So there's one. So it's just analyzing what kind of There we go. So there's your news event. There's your spike. Yeah. And then there's like this period of 5, 10, 15, 20, 25 roughly minutes. Then you get that. And what this move is the analysts giving a directional bias to execute the orders. That's basically what's happening inside the banks and institutions. Is the data hits, the numbers get crunched, the scorecarding system gets recalculated, then you get a bias. And then basically any orders that need to be executed are executed. But what you get is this lull while nobody knows what to do. Yeah. So it's taking those breakout trades, which is basically the same as an ORB. You can't time it, but you know it's coming. So it's doing the analysis on. There you go. So this one here, for example, US dollar unemployment, 1 hour, you probably can't see it because it's tiny, but 1 hour movement after was 0.5%. So the market moved up 0.5% after the news event. The time before that, it moved up 0.33%. The time before that, it didn't move by the looks of things. Got non-applicable. Might not have that data plotted because it's a 5-minute time frame, but it just basically gives you that information. So you can see that the forecast came out the same as the actual, and the forecast came out, or rather the actual came out below the forecast there. When it came out below forecast, we got a 0.5% increase. When it came out on forecast, we got a 0.3% increase. But we got a 0.3% increase because it was the same as the previous. So it wasn't really a reason for it to move hard, was there? So just going to gather all that data basically and see if we can figure out a way of putting together a strategy. I'm just looking for new sort of intraday strategies at the moment. Obviously, with position trading, it's great when the market is moving normally, but at the moment, it's like pulling teeth. Trying to make profit at the moment is so hard, position trading wise, because the market movement is so erratic because of Trump. So I'm just looking for basically more short-term intraday strategies, and breakouts are the main thing to do intraday. They're the easiest thing to trade intraday, breakouts. So I'm just looking for another edge really that I can execute. And it'd be nice to have something you can execute on a schedule as well. So, 1:30 this afternoon, well, between 1:30 and 2 this afternoon, there'll be an opportunity. Between 3 o'clock, between 3:15 and so, there'll be an opportunity. So you know when you're going to trade each day as well. But we'll see. FTSE's back inside range. Struggling to go any lower today. We're not going anywhere on that, so I'm going to jack that in. That's New Zealand dollar short. Market is stalling out. What brokerage platform do you use? This is MT4. This is MT4, yeah. Actually, both of these are MT4. Aussie dollar Swiss, ADR. So again, weakness in the Swiss franc, obviously based on Trump's extra little bit of tariff. So again, no reason to buy the Swiss franc today, but that is a fundamental news event that is nothing to do with scheduled fundamentals. That's to do with unscheduled fundamentals. So that's Trump. Trump is a fundamental. Trump is the biggest fundamental, isn't he? At the end of the day, he's the one that kills everybody financially. But listen to what he says, because he gives those little clues, doesn't he? This is kind of why I sort of said on about the interest rates on Wednesday. It's unlikely they'll change because Trump hasn't said anything. He's like, now's a good time to buy stocks. 24 hours later, biggest rally in S&P in history. He knew it was coming. So he said the interest rates weren't going to change by not saying anything. He is the fundamental godfather at the moment. Right, so FTSE short, DAX short, holding 25% of that position. So we'll see how far we go today. For me personally, obviously I've got a little bit of loss to recoup today. So if I can get that up to a couple of grand, if that FTSE breaks, I may well just close everything out today and and then see if we can get some decent movement in New York. Another ADR's just come in there. 125 euros, Euro Swiss. 125. So again, Swiss franc getting hit. So mean reversion opportunity there. Have to be on price action. It's too far away. Yusuf, he said, I heard there will be a cut in September. Yep. That's been in the forecast for months. That's what Powell has said, September. He was trying to get it forward, basically, for August. It was unlikely it was going to be this month, but Trump wants the interest rates down. He wants them down by 2%, and he wants them down by 2%. If Trump could, he would just drop interest rates to 2% and just go, there you go, hit target. Because it's good. That's target, isn't it? Let's get them down by 2%. Let's hit target. Because then he can go, in my administration, we got the interest rates down to target, the lowest they've been at for so-and-so and so-and-so, and a load of rubbish. Long term, it will send inflation through the roof. And it will send the entire country into a spiral of debt and recession. It'd be awful. This is why Powell's not doing it, because Powell's got a brain, because he's an economist, not a businessman. So this is why we don't have business people in charge of the banks. Powell said, I made no decision for the September meeting. That's why the dollar rallied. Yeah. Well, no, the dollar rallied on the tariffs, but yeah, it's all part of the same thing, isn't it? That dollar rally will be to do with the interest rate non-decision as well. So if you get no decision, it's not bearish. If it's not bearish for the dollar, it tends to be bullish, doesn't it? It's just the way the dollar works. It's the world's leading currency. So, but I doubt they'll be able to stall dropping interest rates past September. I get the feeling it might be a little bit earlier than that. I think we might get a move in August, but late August, but we'll see. Powell is a lawyer, not an economist. Well, yeah, by trade, but he is the leading economist on the planet. He runs the largest bank on the planet. He runs an economy. He is an economist. He's just not. It's not his job title. The Prime Minister of the United Kingdom is a lawyer. No, he's not. He's a politician. Call yourself what you like. At the end of the day, he knows more about economics than most because that's his job. Yeah, you don't put someone. You put someone intelligent in charge. This is, the thing with governments. If you put someone intelligent in charge, i.e., someone with a university degree who's spent years in a career that's highbrow, gets paid a lot of money, you need to be intelligent, it's going to work well. If you get someone who basically inherited his father's business in real estate, was already a billionaire, and just basically got a load of money and put it into other things to make more money, and called yourself a businessman, and you put them in charge of a country, it's not going to get run like a country. It's going to get run like a business. And this is why they put people like lawyers in charge, because they're clever people. Trump is clever at making money because he's understood one thing: money makes money. So you just make more money by making more money, by making more money, and that's all you do. So he thinks that running a country should be done in the same way. Unfortunately, it doesn't work like that, because you've got billions of small moving parts called people that are not making lots of money. It doesn't work in the same way. So this is partly why you have very big boom and bust periods in the US, because they just don't seem to put the right people in charge, do they? Mind you, we don't do it in the UK either, do we? Nowhere does it really, if you think about it, do they? But anyway, politicians. He said we have 2 CPI and 2 unemployment. So he is putting more pressure on new today. On new today will be mental. If unemployment ticks up, the dollar will collapse. And vice versa. Yeah, we've already covered this. You're late, Yusuf. You've joined the stream too late. I've covered all of this already this morning. But yeah, if unemployment goes down, the dollar's off. Yeah. No, you got that the wrong way around. If unemployment goes down today, it's going to go the opposite direction. Sorry, if unemployment today comes out at a 4, yeah, what we're looking for basically today is the unemployment rate to come down. Yeah, that takes off pressure, which means interest rates can drop. Yeah, that's what Powell has been focusing on, is unemployment. That's what he said to focus on. But in a Trump tariff environment, I don't think anything will work as it should, but who knows? I've had ADR reversal indicator for years. Love it. Thank you. Please remind me how to use the ADR mini increments in the top left corner. What? ADR mini increments in the top left corner to guide me on a stop loss or TP when scalping. I don't know what you mean. You mean this up here? I don't know. What's your strategy? You need to decide how to do that. I can't help you with that. All ADR is the average daily range. So basically, when it gets up to here, it's done what it does on average. So therefore, the chances of it pushing further are going to reduce. That's all. This is ADR 10, half an ADR, and a quarter of an ADR. So all this is a mathematical equation. So it's 36.7 divided by 2, 18.4, 18.4 divided by 2, 9.2. That's all that is. It just tells you what the numbers are. So ADR is 36, half of it is 18.5. I don't know what you mean. I don't understand the question. How that guides you is that's what it moves roughly half a day at. I'm struggling to answer the question because I don't really get what your question is. Well, ADR's got nothing to do with strategy. ADR is basically a mathematical measurement of price movement over time. That's all it is. If you want to develop a strategy based around average daily range movement, then you would need to work out what your strategy is and use percentages of ADR, maybe as stop losses and take profits. But I don't know what your strategy is. For example, here, right? If you were to short this when it goes bear, right? So let's say you put pending order there. If that triggers short, you could put a quarter of an ADR stop loss on it, which is 9.2, and you could target half an ADR, which is 18.4, if that's what you mean. Interest rate up affects inflation down, GDP down, unemployment up, and vice versa. So if the high interest rate is not affecting the unemployment numbers, there is no reason for Powell to drop it. I know. You obviously know more about economics than I do. If I work during the day, is it possible to use a reversal indicator on 1 hour and 30 minutes? Only if you can check the charts. So if you work all day long, the question is, how often can you check your charts? So when I was working full time and starting to trade, I was trading 4-hour charts, because 4-hour charts I only need to check 4 times a day. Yeah. So every 4 hours I would check ADR, RSI, well, not ADR, but RSI, and whether there was a reversal or whether there was a candlestick pattern or whatever. So it's impossible to answer the question because it depends how much time you have in the day. If you're in one of those jobs where you've got multiple monitors and you're working for yourself and you can have one of them up, look at charts, you can trade any time frame you like. I scalped triple EMA pullback on the DAX. Okay. Use ADR values to calculate TP and stop loss. There you go then. So why are you asking me? Well, you've obviously got a strategy that uses ADR in it. Why are you asking me what you should do? I don't know. What's your strategy? If you've got a triple EMA pullback strategy that uses 1/4.5 of ADR, then do it. I don't know. That's my major, Yusuf. Cool. Good. You should come teach us then. Right. I am coming back this afternoon at 2:30. We'll see how we get on. Market's coming down again. Big sell-off. Glad I took that one this morning, but I should have held it. FTSE's coming down. DAX is coming down. So I'm going to take a partial on the FTSE. Down at this. The trouble is we're down at this potential support at the moment, which is kind of what we're holding. So if it does break that, we are going to come down through here. So this is either going to be a nice TP or it's just not going to. The rest of the market is collapsing. So I get the feeling we are going to drop on the FTSE as well. So I'm going to hold that. And DAX is obviously new low of the day. So hopefully we might get a decent profit out of today, out of the morning anyway. But I really need this to drop. So yeah, back at 2:30 this afternoon, we'll have a look at what's going on with the unemployment rate this afternoon. So just bear in mind, obviously, any trades you've got on to do with the dollar, you're going to get a lot of movement off of that this afternoon. And then we'll be on for the PMIs. So we'll see what the PMI numbers are up to, whether or not that reverses anything that we get in unemployment. But obviously, we don't know what the numbers are going to be yet. So we'll see what that's like at 2:30. Trade the open. Obviously, just bear in mind as well with the open, if you've had a massive move off the back of this, i.e. we've done an ADR on the indices or more, the chances are that the open will be fairly rotational because the market will have done the movement before the market opens. So you don't tend to get a lot of volume coming through. So sometimes you do, sometimes you don't, but quite often you do have quite a whippy session. So it might be worth, if you've made money in the morning, just limiting the risk a little bit in the afternoon, just to just so you don't give back all the profits from the morning, basically. Right, have a good day. Anything you need, let me know. I'll be in Discord or Telegram. Back this afternoon at 2:30. Have a good one.